What's up, guys? It's your boy Outhenticfx here, and we are back with our 2023 May Premium Mentorship Program, Mastering the Art of Smart Money Trading, guys. I hope that you guys are ready for this one because trust me, guys, this is going to be a banger. So, to get into it, guys, we are going to start off with the introduction and get into the basics, guys. So, what is this module and what are we going to learn for this module? So, as we are right now, we are just introducing the module to you. And for today's lesson, we are actually going to start off on something very, 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 very interesting, guys. So, we've got elements to a trade setup, which will be today's lesson. Tomorrow's lesson, which will be Tuesday, will be on essentials to analyzing the weekly and daily range. Then from there, Wednesday's lesson will be on internal range liquidity. Right? Moving forward from Wednesday, we've got Thursday's lesson, which will be on premium versus equilibrium levels in the market. Basically, how to identify them and what they mean and how to trade at these certain levels in the market. Then from there, we're going to have Friday's lesson, which will be discounted versus equilibrium levels, guys, which is a very interesting and key topic when it comes to this module, guys. We're going to skip Saturday, have a little break, on Sunday, and then Monday, we're getting straight back to it with institutional patterns, followed by Tuesday, which will be high accuracy entry points plus entry check points, right? And then we're going to end this off on Thursday, but for Wednesday's lesson, it's going to be high probability targeting. And then from there, Thursday will be what you should focus on as a new trader, guys. So I hope that you are ready because we need to get quiet right now. We need to get quiet. I need you guys to put in your focus and zone in, right? So as I said, my name is Kenneth Maleka. I will be your mentor for this module. Welcome to the premium mentorship program for this month of May on YouTube, your ultimate blueprint to achieving success in trading in 2023, right? This mentorship program is specifically designed to help you navigate the complexities of the trading world. Whether you are an experienced trader or just getting started, it does not matter. Everything that I'm going to be teaching you here, guys, is fresh, new, and very important, guys. And with my knowledge and years of experience in trading and investing, I'm here to guide you every step of the way, right? So moving forward, we do have our personalized approach to everything, right? You will gain a deep understanding of the markets, develop your trading strategy, and learn the skills and techniques necessary to achieving your trading goals within this module, right? Our program offers additional exclusive content, guys. This is if you want to join our exclusive one-on-one mentorship program, right? We include live Q&A sessions, personalized coaching, and a community like-minded full of traders, guys, right? So we've got a whole community on our Discord channel. We are all committed to success. And for you to have access to our exclusive mentorship program, just visit the link in the bio, guys. Visit the link in the bio. Let's have a amazing time together, guys. By joining our exclusive mentorship program, you'll have access to the knowledge, tools, and support you need to make informed decisions, manage risk, and maximize your profits. Will help you develop a winning mindset, hone your trading skills, and navigate the challenge and opportunities of the trading world forever and beyond, right? So if you're ready to take your trading to the next level, join us today and start your journey towards success in the markets. This module is based on some of the things that we do teach in our exclusive mentorship program. But without further ado, guys, let's get into it. So what I want you to do, guys, is just get everything ready. Get everything ready, guys. Tell me how you feeling. Drop a emoji into the comments. Drop a emoji into the comments, guys. Drop a emoji into the comments, guys. I'm giving you guys a minute, guys. just drop an emoji into the comments. Tell me how you feel. Tell me what type of things you'd like me to add onto the module, guys. We can carry on this module till the end of the month, guys. But right now, drop an emoji, comment down below. Share this with your friends. Share this with your family, guys, and let's get into it, guys, because without me having your guys support, I will not be able to grow this channel. And the more people know about this mentorship program that we are going to be running for the next 7 days to a week, right, that is the only way, guys, we can spread the word and help people with their trading journey, guys. So I'm grateful for you to be here. Thank you for joining us. My name is, as I said, Kenneth Maleka. I will be your mentor for this lesson. So without further ado, let's get into it. So elements of a trade setup, right? I hope you guys have your notepad and your pen ready because the journey starts now, guys. So basically, what is the elements of a trade setup? So how do we know how to find certain trade setups? What is the process of starting on the higher time frames going down to the lower time frames, right? So the first step that we need to do is identify a nice price leg move on the weekly and daily time frame. The questions that you should ask yourselves, right? So what are the questions you need to ask yourself? The following questions are: where is price most likely to gravitate to? So in the next coming week, right, since this is the weekly time frame we start on, in the next week, where are we likely to gravitate to, right? What phase of the market are we currently in? Are we ranging, or are we in a bullish or bearish market, right? Then from there, are we in a discounted or premium phase, right? So as we know, we buy low, we sell high, right? So your premium level is where we sell, your discounted level is where we buy, guys. You need to ask yourself these questions. And has price taken out any sell/buy stops, guys? I will be explaining in depth what sell and buy stops are, right? So what else are we looking for on the weekly time frame? We are looking for institutional patterns. Which institutional patterns can we identify? Institutional patterns include your order blocks, your fair value gaps, your breaker blocks, and so forth, guys, right? Followed by, are we in a trading range or did we break structure? This is the final markup for our weekly time frame. So let's get into these steps. Where is price most likely to gravitate to? Let us begin. Okay, cool. So we are on the weekly time frame right now. We can clearly see we have this nice push to the upside, and then we have this nice retracement to the downside. We can currently see that we are stuck between point A and B, right? Within this weekly time frame. This pair is USD JPY, and we will be using this pair and breaking it down from the weekly time frame all the way to the 5-minute time frame, guys. So what phase are we in? Are we bullish or bearish? So clearly we can all see the price is creating higher highs and higher lows, right? We need to always ask ourselves, is price creating higher highs or lower lows and lower highs, right? So right now on this weekly time frame, we are creating that high and that higher low, higher high, higher low, and that high, right? The reason why now I have marked up this as a high instead of a new higher high is because we have broken structure to the downside. So this becomes a new trading range, right? So what we are most likely to see is either price gravitate up to our premium level and then break structure to create either a new bearish trend or just reset and start a new bullish trend within this trading range. But for now, as you can see, I have marked up my high and low and the new trading range, guys. The next question, which is question 3, are we in a discounted or premium zone, guys? So from what I just explained to you guys, now, I want you guys to ask yourself, what is premium, what is discounted, right? Ask yourself. I'm just giving you a few minutes to just gather your thoughts and see how that would best suit you. So to mark it up, we mark up from the high to the low, right? This is our new trading range. Our premium will be obviously at the high, because when price reaches this area, this is the area where price will be overbought, and then we will look to sell. Our equilibrium point is our 50% level, so the midpoint of the entire range. And then from there, our low is obviously our discounted zone, right? Is price in a discounted zone or premium zone? Why? Because when we buy at discounted and sell at premium levels. So as you can see right now, we are still in a discounted zone, guys. We are just below the midpoint or equilibrium point, which is basically the 50% level on a fib, right, guys? So all we now need to do is, okay, cool, let's figure out how we can move forward from here, because we did break structure to the downside, right? So the next question that you need to ask yourself is, has price taken out any sell stops or buy stops, right? We can see that we have a buy stop, buy stops, and our sell stops marked up, right? So we can clearly see that we've taken out our sell stops to the left side here. And basically what sell stops are and buy stops are is the following. Above old highs, right? So old highs, so we've got a high here, we've got a high here, we've got a high here, right? Is our buy stops. Below old lows, so these are old lows. So your old lows will always have your sell stops. Old highs, buy stops, right? We clearly swept out these sell stops here, and now we are moving into what institutional patterns can we identify, followed by this, right? So now we, after marking up everything, right, we need to just have a basic understanding of where we are. We can clearly see that we have a nice fair value gap, right, which is basically imbalance or insufficient price action in the market. This is basically a process whereby when price pushes up into a certain direction, it leaves a gap or a void in the market, which the market will return into, right? As you can see, this wick returned into this fair value gap and continues its overall direction. So forth with this move, which came into this imbalance, folded, mitigated it, and continued its overall direction. So we've got our institutional pattern, which is a fair value gap, right? Followed by our order block, which is a bullish order block. A bullish order block is basically the last down candle before the major move up, right? Followed by a fair value gap, obviously here, which we marked off in this green zone, and a bearish order block, which created the break of structure over here. So this is a bearish order block, is basically the last up candle before the major move down. So now we've got all our components together. We've marked up our institutional patterns. We've marked up our sell stops. We've marked up whether we are in a premium or discounted level. We've marked up our new trading range and our higher highs and higher lows and so forth, guys. So once we have done all the single or individual markups, we all need to ask ourselves one question. Are we in a trading range or did we break structure? Because without this knowledge, we cannot know how to move forward, right? As you can see now, we have a nice clean break of structure, which price has broke, creating this new low, right? So this now becomes our new trading range, right? As you can see to the left, we've broken structure, created a new high. We've created that higher low, broke structure, created a higher high, created that new higher low, higher high. So what makes a break of structure? A break of structure is only valid if price breaks the previous structural highs or lows with a full body candle and wick, right? So that is a valid break of structure. That confirms the break of structure. That confirms the new high or low, right? Once we have all these components, we need to put a final markup together. So this is how your charts will look once you've put everything together. You will basically mark up the weekly imbalance, weekly break of structures, weekly sell stops, right? Once that is done, you will then mark up your weekly institutional patterns, which is your fair value gaps, right? Which is your areas of imbalance, and your order blocks, which you can clearly see we have mitigated the order block and price is pushing up. We currently have buy stops residing at these highs within our new trading range, within a discounted zone. So we clearly see that, okay, we are in a discounted zone. This clearly means one of two things. Price is going to take out these equal highs, come into this fair value gap, or mitigate our order block, right? So let's see what we do. Let's see how we can basically now find trading setups on lower time frames. So now from there, we move on to the daily time frame. Let's go into the daily time frame, zoom in into this area, see what is going on, guys. So on the daily time frame, there's specific things that we are looking for. We are looking for identifying a swing high and a swing low. Is price expanding higher or lower in that given trading range, right? You need to note the following. We want to see short-term lows or highs, and we then want to find liquidity and aim to take them out. The market is either trading to take out stops or filling imbalance, guys. Before we get into the next slide, guys, don't forget to give the video a thumbs up and a comment down below if you are enjoying the content so far, guys. I know that this is long, but guys, let's get into it. So, what do we see right now? What do we see? We need to now zone into the daily time frame. So, what's happening in the daily time frame is the following, right? So, all we need to know is on the daily time frame, above old highs is buy stops, above old lows is sell stops, right? So, we look to the left, guys. We always start off from the left and go all the way to the right. We have our break of structure creating this new price leg, a retracement into this bullish order block, which is our last down candle before the major move up. We then see price took out the sell stops, right? So remember what we said in the previous slide. We want to see short-term lows or highs, and we want to find liquidity and aim to take them out. So as you can see from taking out the sell stop, we have a unmitigated area here, which is a bullish order block, which is a down candle before the major move up, expanding to the upside and breaking structure to confirm that new high. We see imbalance. So we clearly know that even though price mitigated this order block, we are possibly going to reside down to this area, mitigate this imbalance, because as I said in the previous slide, price is either taking out stops or filling imbalance. We then have a nice clear break of structure to the upside. What do we leave in this break of structure? We leave a fair value gap, we leave an order block, which created this expansion to the upside, right? From this expansion, we can clearly see we have another range, break of structure, and a swing high. So what do we do now on the daily? Since we now know that this is our new trading range on the weekly, between this low and that, we mark up our swing high, we mark up our swing low. We then mark up our buy stops. As you can see, I've marked up all my buy stops and a break of structure, right? This break of structure is valid because, as you can see, from price gravitating to the downside, we leave a void in the market, creating this fair value gap. We then have a retracement and an expansion to the downside. We can clearly see we broke structure, right? The only reason why I didn't mark it up is because I don't want my charts to be cluttered, and I want you to stay focused on the main important factors. We then have a retracement, expansion to the downside, breaking structure. These breaks of structures are all marked up, obviously, if you want to clutter your charts. But then now, where is the most recent lower high? It's at this wick, right? So what we want to do now is at this wick, we are going to zoom in into the 4-hour time frame and mark up that break of structure, see what is going on, and then from there go into intraday analysis. Our intraday analysis is basically plotting the previous week's open and close and analyzing the previous week's movement. What we will then do is find recent short-term highs or lows from previous price action for the new week ahead, right? Note the following. If short-term lows gets taken out first, that means price is inducing shorts. This is a manipulation process caused by the algorithm to manipulate or create buy stops before a major move to the upside, same applies to short-term highs getting taken out, inducing buys to create sell stops before major move to the downside. So let's put that into the charts, right? So obviously, let's just go back actually so I can show you what that basically means. So what that means is basically when price is gravitating to the downside, taking out all-term lows or sell stops, that is inducing shorts. It's making traders basically get into the market to sell before a major move to the upside, right? So a reversal will come once price has taken out all the sell stops that reside at all-term lows. Vice versa with buy stops, right? So anyway, this price leg now that we are analyzing is now on the 4 hour, right? So obviously on the 4 hour we have a nice expansion to the downside, break of structure, leaving a nice clean void of a nice fair value gap, right? We've marked up our buy stops to the upside. Remember, what are we looking for? This is the previous week. I'm gonna show you basically how to trade a new week. We are gonna go into Monday, Tuesday, Wednesday, and so forth, right? So we mark up our supply zone because the supply zone is responsible for this expansion. I have refined my supply zone obviously due to the information that I have on lower time frames. Once we have that, we can now just see that how price gravitates back up to this area, tries to come into this fair value gap, but doesn't. It actually respects this order block. This is a valid order block, guys. Obviously, on a lower time frame, there will be microstructure shifts that created this reaction, causing price to suddenly create this displacement to the downside and then continue its lower lows and lower high structural momentum. So obviously we then reach our order block on the higher time frame. Once we mitigate that order block, notice how price gets into that order block and suddenly expands to the upside. We expand to the upside, breaking the previous lower high with a clean break of structure, which is valid because now instead of marking up these candle with a wick, we actually gonna mark up the candle that has a candle body. Sorry, that has a candle body and a wick that breaks structure to the left, right? So we've mitigated the order block down here. We've created a new expansion. What is next, right? What is next, guys? What is next, guys? So basically what we have next is the retracement. So now we're gonna get into Monday. So basically Monday price retraces into the previous week's order block. Probably this was Tuesday, and I mean Thursday's price leg, this was Friday. Monday comes, we have price mitigating this order block and expanding all the way to the upside, right? As you can see here on this candle, we have a candle body and a wick that breaks this candle wick high, which confirms the break of structure. We leave a order block and a void within this area. What we'll basically do now is that Wednesday we wait for price to retrace into this zone. I mean, this is Monday, sorry, Monday. This is Tuesday. Wednesday we wait for the retracement to mitigate the order block and wait for that new break of structure. Notice how price is gravitating to these buy stops. We're taking out these buy stops, right? So the people from last week, right, who were holding these sells and putting their stop losses above these areas are currently being taken out, right? We are gravitating to these buy stops. We are aiming to take them out and take their money and use that to our advantage. So now the next week, Thursday comes, we have a nice expansion on that previous week, a nice expansion on Thursday, and Friday retracement into a fair value gap, not mitigating this order block. The reason why I marked up this fair value gap is because it had a nice reaction. Price came in and spiked up with a bullish candle. So now the question we need to ask ourselves is, where is price most likely to come into on today? So as today is Monday, right, the 8th of May, we are gonna break down what the market is gonna do today, Tuesday for example, and Wednesday, and so forth. So today's session went as follows. we basically see the new week open. Price now creates this Monday Asian range, which consolidates within the fair value gap. Notice the spikes, guys. This is a valid confirmation that this fair value gap is holding, because notice how the spikes to the downside are bigger, right? And all the candles are pushing to the upside. So many bullish momentum here, so much bullish momentum. Already on our weekly time frame, we are in a discounted zone, so we are looking for buys, not sells. So the main objective for Monday is to catch this entire move to the upside. So Monday comes through, we have this nice move to the upside. We've taken out buy stops, right? So it's a new week. So now let's put into perspective our sessions. So we've marked up the new week open, right? And then the fair value gap. So this now is on the 1 hour time frame. So the aim of this whole process right now, since we are in our supply zone, is to figure out how can we trade on New York session, right? How can we catch this New York session trade if we missed this London session trade, right? So as you can see, guys, at the bottom, we started off at our fair value gap, which is here on our New York open here, right? So from here, we have price creating a sub break of structure, retracing, right? Creating a secondary break of structure, which is a confirmation that price is going to gravitate to the upside. So if you are advanced in this certain category, you would have actually entered during London session open on this order block and caught this entire move. As you can see, London session basically left a void in the market. So now we know that, okay, we've reached our higher time frame supply zone. We've taken out buy stops. So the only way forward is to take the trade to the downside. We are not looking for buys anymore because we've reached our point of interest. We've accumulated everything that we need, right? So now price opens up New York session. We are stuck in the supply zone. So the question you have now is, since price is so bullish, do I carry on buying? Do I buy at this fair value gap? Do I buy here? Do I buy here? What you're going to do is just basically go down onto the lower time frames, see what price action is doing, and then react. Guys, react to what the market is doing. This ain't no guesswork. We obviously have marked up our areas of void, right? So now, since we are in a supply zone, which is a premium level in the market, we know that at that level we should expect sells. So on the 5-minute time frame, right, let's see how we can enter this trade during New York session if we miss the London kill zone. Since we are in a higher time frame supply zone and we have mitigated the order block and filled imbalance within the 4-hour price leg, right? All we want to see is a break of structure and order block confirmation on the 5-minute time frame. Very, very, very simple. We want to see a break of structure to the downside and a mitigation of an order block, guys. Right? I hope you guys are enjoying the video as we are almost about to finish elements to a trade setup, guys. I hope, guys, that you have your notebooks out and pens. If at any point in this video you need a reassurance or you want to ask questions, drop a comment down below. I will be answering all comments. And at the same time, don't be scared to go back, watch the video again, guys. Pause the video, see the charts, see how I mark up my areas of interest, right? And zone in into what we call the areas of interest, right? So now, let's be quiet, guys. I need you to ask yourself something. Ask yourself, how is price going to react in the supply zone? Because the last thing you want to do is just be selling and selling and selling. And what if price doesn't respect your setup at all? You know what I mean? So what we're going to do now is the following. Let's get into it. We're going to just mark up our higher time frame supply zone, which is here. We can clearly see the price is in this zone, and we have created a high at our New York session open. All we're going to do is mark up that high and that low, wait for a sub break of structure, which we can clearly see. What confirms the break of structure, guys? A candle, body, and a wick. Full candle, not a wick break a full body candle, right? Then step 2 is we are gonna mark up a area of liquidity. We're gonna mark up an area of liquidity and wait for our kill zone. Our New York kill zone is at 8 a.m., right? And the aim of this is to take out liquidity when New York kill zone enters, right? Mitigate an order block and will enter at this area. Obviously, when it comes to entry points, if you enter, for example, let's say this is 18,000, for example, your stop loss will either be at this high or this high of the entire session. So since this is a 5-minute time frame, if you put your stop loss here, it would probably be 20 pips, 15 pips, and then you will have your entry at this gray zone over here. So see how once price breaks structure within that supply zone, we wait for that order block, we wait for price to sweep liquidity with the wicks. We basically see price gravitate into this order block, which created this displacement to the downside, leaving a fair value gap or void in the market. And even if you entered on this fair value gap, which would be here, your stop loss can't be above here because there's equal highs. Your stop loss needs to be above this high or this high. Overall, guys, remember that I personally, when it comes to me trading, I have a 20 pip stop loss, 25 pip stop loss. I played safe. I don't have those 2, 3, 5 pip stop loss because it doesn't make sense, guys. It doesn't make sense. Imagine price kicking you out and then just reversing. That would be daunting. So once 8 a.m. opens, notice how price, this is now when the New York stock market exchange, Wall Street, the banks are running transactions, and just see the volume when the market opens and just see that major displacement to the downside and that drop, leaving a entire void and fair value gap. So obviously this would be our trade entry on the higher time frame supply zone. During New York session, from entering into the zone, notice this displacement. And where do we target? Our TP1 will be at these sell stops. TP2 will be at our fair value gap, which will be here. And notice how price gravitates all the way down to this bullish order block, right? This is golden, guys. With this strategy, this is literally all you need. I don't even need to carry on this mentorship. This is all you need to move forward and basically find and refine your strategy, guys, because let me tell you something, guys. All you need right now is focused and a step-by-step checklist, which I'm giving you right here in this video, guys. I just want to just let you know that, guys, we are going to basically start having live streams from next week, right? You are going to be seeing me trading live on YouTube day by day, New York session or London session from next week after we are done completing the mentorship program. And I just want you guys to know that as I am human, guys, if I do make any mistakes during this course or mentorship, you know, forgive me, guys. This is part of the game. So to get into it, right, let's test the following. So I'm giving you guys homework, right? What I want you to do is basically go onto any pair that you guys trade, and then from there, when you go onto this pair, just basically, you know, ask yourself the following. And here's the rules, right? So let's say you've completed marking up your weekly, daily, and you are now on the intraday time frame. You want to mark up or trade New York session kill zone, right? So these are the rules. So what you're gonna do is wait for your Asian session range high or low to be taken out. We mark up the new expansion or trading range, right? So you need to, step by step, wait for price to reach your point of interest based on the previous day's price action. Is price in the discounted or premium level? Mark up your 8 a.m. New York open with a horizontal line, right? Wait for the sweep in liquidity or stops and a break of structure. Enter on a order block or fair value gap. So notice this, guys. So we've got our Asian high and our Asian low. Price sweeps the Asian high. We know that from our previous day's price action, there is a nice supply zone. We target that supply zone, right? Once that supply zone has been targeted, We then mark up the new expansion or trading range, right? And we obviously know prices in a premium level. From there, we mark up our 8 a.m. New York open. We wait for a sweep in liquidity and stops and enter on a order block of fair value gap. Make sure you have your checklist together, guys. Check step by step, guys. I advise you to watch what London session does carefully, analyze the movement on London session, because clearly two things can happen from London session to New York session transition. Price will either continue the momentum in New York session, or if price is very bullish during London session, New York session will create that retracement for the next expansion, which will occur during the next day's session, guys. So that's your checklist. That's what you need. And I want you guys to understand the following. The mind is just like a muscle, guys. The more you exercise it, the stronger it gets and the more it can expand, right? This is a great quote that I live by. I always go back on my charts, see my mistakes, zone in, focus, analyze, look at the small details, because by looking at those small details, understanding the small key elements to that trade setup that you're trying to find for that given day, or even just finding out the direction for that given week. These steps are important, guys, because the stages to growing is first yearning to have that thing of, okay, cool, I understand the market, I want to trade, I want to do forex, and then actually learning, putting in the hard work, putting in the early mornings and the late nights, working, grinding, back testing, guys, and then from there you earn, guys. So just imagine, you caught the session on a Monday and made probably about 50 to 80 pips. Let's say roughly you made $1,000 that day on a $500 account. Beautiful, guys. Beautiful, 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 guys. So just a few notes that I want you guys to just remember is just mark up your short-term highs, your short-term lows, and always know that price will eventually gravitate to take them out. And just remember that above old highs are buy stops, below old lows are sell stops, and imbalance is basically a void or gap within price action or a price leg, right, in the market. So notice one thing, guys. If you want to go further into like the 2 minute time frame, you can also do that. That is just me, my preference. Just decide to stop at the 5 minute time frame. But yeah, guys, that's it for the video and for today's lesson. I hope you guys enjoyed it. And we will be going on to tomorrow's lesson, which will be basically identifying, or the essentials of identifying, the weekly and daily range, guys. So I hope that you enjoyed the lesson. It's a wrap. Authentic FX signing out. Bye, guys.